Good morning, traders. It's New Year's Eve. It's about 11:30 a.m. I haven't taken any trades today. I wasn't planning on it, although I did have an eye on the market early this morning, and I'm going to talk about kind of why I didn't take any trades and what I was expecting to happen. I really don't like to go into a trading day with much bias, but I have noticed that on these holiday trading days or days before big holidays, that things can get a little bit weird. So, if I don't have like a big cushion from the month, which I don't, I'm just slightly green this month, then I don't really feel like taking a chance on trading on a kind of unsure day. I mean, obviously no day in the market is a sure thing, but I just feel like, we all know that there's a lot of psychology involved in trading, not just our own psychology, but psychology overall over the entire market. You see when certain news comes out, like when the UK virus came out, the strand of the UK virus came out. That was at the Monday of the week of Christmas, had a huge effect on the market. No one was trading that morning, and then, the market just took a big dive that day. So there is this kind of overall cloud of psychology looming over the entire market. So whenever you feel like there might be a day that is going to have an impact on that, we'll call it the psychology cloud, unless you have a very big cushion and you're feeling like you're very disciplined and you're going to take very low risk trades and only the best setups, then it's probably a good idea just to sit out on those days and just watch what happens and learn and do things like that. So that's what I did today, and I have 3 stocks that I pulled up on the watch list early this morning. I did open up Webull around 4:30. I didn't get up really early because I knew I wasn't interested in trading, but I was curious to see, was there actual volume today, or was it going to be a day like that Monday of the week of Christmas? So there was volume. I pulled up the top gainers list and organized it by volume, and one of these stocks, I don't remember which one, was trading with 1 million shares of volume at 4:30, compared to that Monday of Christmas, where the highest volume stock by 4:30 a.m. was trading with 6,000 shares. So 1 million shares versus 6,000 shares. So that just goes to show you what a crazy day that Monday was. And I learned a lot that day, and I'll talk about that in a second too. So anyway, even though there was volume, looking back, there wasn't a lot of easy entries. The patterns aren't super strong, and the moves weren't very big. So I don't feel like I missed out on much. BNGO probably had the best, although it's not a very nice pattern. It would have been tough to trade and feel good about it and make a decent profit. Here it is right at 4 a.m. You can see it made a high right away, and then it sold off, and it just kind of chopped around down here. So, one possible entry is for the break of this level. And I know that getting in there, I would have felt a little bit weird. I'm not even sure if I would have taken that trade. And my stop loss would have been right here. So it would have been a nice tight stop for sure. And the next candle doesn't break it. So I still would have been in the trade and maybe have been able to, take a nice big chunk of this move. Maybe, this thing happened within the first few minutes. So it's debatable. Plus, BNGO had some selling pressure from previous days. Let me see if I can get it to show up a little better here. Yeah. So we were just looking at this area right here. I don't ever like to get into a trade when there is kind of this selling pressure overshadowing where the price currently is. I like to get into things when they're on their way up. So this was basically overall trying to recover, and I'm not really interested in getting into those. Like, I would prefer to get in back here where you see there's no selling pressure, so this thing's a lot more likely to pop. So anyway, that's that one. And then AIKI didn't do much either. Here it is at 4 a.m. This is a dashed candle, meaning low volume. It probably would not have been on the list organized by volume right away. Volume came in over here at 4:02, and so I may or may not have caught it. You could argue there's one entry right here for the break of this candle, and it makes a decent run after that. But that I would have had to catch it like a minute or two after the volume came in on the screener. That would have been definitely tricky. Then there is one more kind of consolidation area here that you may have been able to take an entry on, but nothing. This is not very clear or clean. It would have been tough. If you finally saw it, make a high here, then you're waiting for a pullback entry. you could get in right here, but then you get stopped out. So it's overall was not a very strong stock, and you see it just kind of sold off for the rest of the day. Then it never got anywhere near the pre-market highs during the market. So to me, that's not really a missed opportunity. And then the other one was PED, and again, this looks like these are telltale signs of huge spreads. You see this kind of gap up to a dashed candle. That means there's no volume there, yet the price jumped up a lot. So that means that, and you see there's no volume indicated here. So that means there was a huge spread, and I don't like to get in to stocks when, I mean, that's like a 10-cent spread right there. We're very close to it. Yeah, I just don't like to enter when there's these big spreads, because let's say, for example, the high of this candle is 230, and you're saying, okay, I'll get in at 231. If you bought in, I don't think it would have happened here. The price didn't creep up, but if the price did come up, let's say to 231 or 232, you would have been filled really, really high because of the spread. So you would have suffered a lot of slippage there. And this thing did move here, but I bet you that it was whipping really hard in both directions because of that spread. So, and again, it just kind of sold off afterwards. Look, you can see evidence of the spread here, that those big gaps, big jumps. So this was not very good either. And these were the top 3 volume. That's why I chose these. These were trading with the most volume in the pre-market. So that's basically why I didn't take any trades today. And I think I'm going to end the video there and make a separate video of reviewing my month, because this was kind of already a lot of information, and I think we're probably close to 10 minutes already. Let's see here. Yeah, 6.5 minutes, 7 minutes. So that's enough information for one video for you to digest of why you may not want to take trades on holidays or days before holidays, or things to look for if you are going to trade. So let me know if you have any questions about that below. I basically, I'll assume that I saved myself money today by not trading, which is always a good thing. So, and even if I missed out, I didn't miss out on much, that's for sure. So there was no big runs, and it doesn't really matter. Even if there was, once you have made a decision, for whatever reason that, okay, I'm not interested in trading on this coming day, then just, you have to accept that decision no matter what happens that trading day, and say, that was my plan for that day, and I followed my plan. And you exercise discipline, and that's always a great thing. If you can't miss a trade day, then you may have to step back and find out why, because it's never about one day. So anyway, let me know if you guys have questions below. Hope if you did trade today, I hope you did well, and I hope you were careful out there. So I'll see you in the next video. I'm about to make a video of reviewing the month of December with lots of great information. So check that one out. That should be up shortly after this one. Take care.